Welcome to Money Talk. Outlook 2019, making good investing easy.
For centuries, investors have been setting sail in search of new opportunities. Trade has fueled the growth in global wealth.
The cutty sark was the cutting edge of globalization, bringing tea from China faster than ever before. High tech driving higher profits.
Today, trade is more important than ever before, and it's been one of the big investment stories of 2018.
So, let's take a look at that and what else has been impacting markets this year.
The world is so uncertain.
Volatility has spiked significantly higher.
There's anger out there.
It's been a difficult environment for us.
We are going to experience more stormy conditions.
Some believe that central banks are behind the curve.
Inflation fears are increasing. Returns are likely to be lower and maybe interest rates gradually go up.
Shares globally look rather expensive.
Brexit is going to be with us for a considerable amount of time.
It creates uncertainty, and uncertainty is never good for investment markets generally.
We believe that a lot of that uncertainty is priced in. We actually are more worried about some of the implications for global trade.
It keeps me awake at night. What is actually driving markets today is the implications of technology change.
The disruption from the internet companies, which is leading to downward pressure on prices.
People are still too pessimistic. They think the next recession is around the corner.
You should care about things that are not going to get obliterated by the next economic downturn.
I don't like businesses that have the main driver of their success outside of their control.
When you find a companies whose products taste good, then you buy the stock.
Companies that are less sensitive to the economic cycle.
And all of that ultimately helps us to avoid what you just call a value trap.
Avoid the big losers.
There's a lot of concerns geopolitically.
Valuations are very attractive across the Asia-Pacific region.
There are huge chunks of the market which are extremely cheap.
Over time, what you've seen is that bonds do act as a good diversifier.
Bond yields will go up if inflation begins to accelerate.
Growth rarely comes cheap. We are willing to pay up if we're getting good quality, sustainable growth.
"2018, a year to remember."
10 years on from the financial crisis and volatility is back, investors are clinging on to the longest ever bull market.
But what does 2019 hold in store? We spoke to 6 leading investors about the course they're charting through the year ahead.
Markets have had a great run since 2009. 2018 has been a bit more difficult. Now, the things that we would look for a major market downturn would normally be, firstly, a downturn in corporate earnings, and secondly, overly tight interest rate policy around the world. Now, at this stage, we don't think those conditions are in place for 2019.
We are likely to see continued volatility with the large cap technology companies because there are rising risks in regulation, in tax and antitrust, and those risks are only growing.
There's some significant structural problems with the UK economy at the moment that we see on most high streets up and down the country. Our job is to identify those problems, avoid the areas of investment that may be related to that, and look for the opportunities at the other side.
2018 has been a tough year for emerging markets for 3 key reasons. Firstly, global liquidity withdrawal. The Federal Reserve has been hiking interest rates. Secondly, trade tensions. And thirdly, a much stronger dollar, which is always a challenge for emerging markets.
We're becoming a bit more defensive in the portfolio, and there's 2 main reasons for that. One is US monetary conditions. These continue to tighten, and that has an impact on other parts of the world. The other thing is the slowdown in Chinese growth. Chinese growth is bad enough for China, but it really affects other regions as well.
Politics is causing a significant amount of uncertainty at the moment, something that investors tend to dislike because it affects the ability to plan over any reasonable time frame.
The Fed is certainly on a rate rising cycle. However, they do monitor global growth, and slowing global growth is on the horizon. So they could moderate that rate rising path.
Central bank action in 2019 will be dominated by the US Fed. Inflation is clearly the dog that hasn't barked, but with signs of wage growth and cost pressures, investors are fearful.
We still are seeing tax cuts in early 2019, which will benefit the consumer, which is vitally important to keep the economy going.
It's been a volatile year for commodities, particularly the oil price, but the higher oil price over the last year has been beneficial to emerging markets overall as an energy exporting asset class.
The two main themes that have been driving markets have been trade issues between the US and China, which have particularly affected markets in 2018, and technology, the disruption brought by technological innovation. That's been driving markets for several years, and that is both bringing opportunities within technology companies as well as identifying real threats to established incumbent players.
The attraction of the UK market at the moment is that it's trading at a significant discount to other comparable markets, offering a very attractive entry point at the moment.
Europe's been an interesting region this year. Domestically, the story remains good. Unemployment continues to fall, but it's been the politics that has dominated sentiment this year, Italy in particular. Europe, as a big exporter, is also very exposed to trade wars.
One market we really like at the moment is Argentina. It's been a tough year for the country, but at this point in the cycle, we think the currency is very cheap and the bond yields are extremely attractive.
Japan is a market that has had a relatively tough year in 2018, and that's really been because of trade issues between Japan and the rest of the world, particularly China. But if we look over the past few years, there have been very significant shareholder reforms, great improvement in profitability, and in fact the market has become more and more attractively valued. Japan could be a really interesting market.
We don't see the end of the 30-year bull run in bonds for three main reasons: the global debt issue, the demographics, and the income inequality.
It could be a decent year for equities, but all depends on the trade dispute between the US and China.
We live in uncertain times. As investors, we need to keep an eye on the horizon and be prepared for some storms along the way.
Hopefully this episode of Money Talk has given you some insights into what might lie ahead as we navigate 2019.
Keep an eye on our website for more guidance.
And you can listen to our latest thinking on the move with Money Talk Radio, our twice weekly podcast.
Thank you for watching.
Goodbye.
Goodbye.